One of the most frequent questions I get is, how do you value a vacant pad? And I figured I'd bring in a longtime friend of mine, got started way back in 2015, like I did. Similar size, similar age, similar philosophy. Someone I could not convince to come onto my podcast until right now, so I don't really believe it's real. But Brad, dude, welcome, man. For those who don't know you, tell us who you are, what you own, and a little bit about you.
What's up, Ryan, man? Thanks for having me on. Yeah, Brad Turner, Virginia boy. Same. Well, I'm 40. I don't know how old you are, but single dad to four kids, just grinding away. Like I said, grew up in Virginia. My parents, both worked 3 and 4 jobs at a time, so I know hard work. Played all the sports and studied accounting and finance at UVA, and kind of while I was there I learned that real estate was kind of my passion. So spent the next 10 years working for what I feel like 10 different companies. But as soon as I learned how a company did something, or how they underwrote deals, then I'd leave and go to another one and just jump around. Finally 2015, started really getting into the mobile home park space, and reading and listening to podcasts, and just soaking it all up, whatever I could take in, blending everyone's different strategies together, and ultimately formulating my own strategy. Got started. So 2016, I went to Vegas to the MH conference, and back in the day, everyone was looking for, hey, I want lot rent, 100,000 MSA, blah, blah, blah. And everyone was looking for the same thing. I took a little note card and I said, I want vacant sites. I want park owned homes, and, I want public utilities. So that's how I introduced myself to all the brokers, and, just getting on the phone, talking to them a lot. And then all of a sudden the deals just started coming. A little too fast. We ended up buying about 6,000 sites in 5 years. COVID happened, and everything doubled and tripled in value, and got out of a lot of that then, and then kind of focused more on the development, infill, expansion play, and kind of trying to do a better job of building out these communities than what was done in the past. More amenities, clubhouses, pools, all that stuff. That's kind of our focus moving forward. But yeah, no, man, I appreciate you having me on.
Brad actually has been a longtime listener. So true story, when I started this podcast in March of 2018, he was one of the first people to listen, chime in, give me feedback, everything. So a big thank you to you, Brad, for tuning in over the years and giving your feedback. It's been important. And as a fellow ACC guy, Wake Forest University, UVA, I will say it's awesome to see smart, hardworking entrepreneurs getting into this space. You and I were obviously rarer back when we got started, but today it's really encouraging going to MHI, Seco, all of them, and seeing smart people, good people coming into the space. Speaking of which, your LinkedIn says Brad Turner solving the affordable housing crisis. Brad, for those, again, who haven't met you, or maybe have met you, don't know too much about you, talk about your why. Talk about your mission strategy and why you have that on your LinkedIn.
I mean, my why, I guess my why was built when I was, I was probably 13, 14, but I read a book about the golden rule, kind of a life workbook, and how, pure love and treating other people right is if everyone in society acted like that and took care of other people more than they took care of themselves, then the world would be a better place. Right. So I've kind of taken that to the business world, and it's amazing how much it works. If you do good for other people, just good stuff starts to happen to you. And as far as housing, like, housing has been a huge issue, just because like I said, I grew up, I didn't have a lot of money. And I saw the struggles that my family went through, and, not being able to afford, the monthly mortgage payment or whatever. And I know, like, what it is now. It's just, housing has become unaffordable for half of our country. really, especially over the last 2 years. I feel like rents have gone up probably 30, 40%. Especially with interest rates now, that's taken away probably 30, 40 million buyers that who would have been able to afford that, 350, $400,000 house. Like they're now looking for a $250,000 house. So, but in terms of what am I doing to solve that? Well, first, I think the answer lies in what we're doing. I think the answer to the housing crisis is manufactured modular homes built offsite, brought in, or there's efficiencies we can find in the process. But I mean, like the last time we went through inflation like this, it was the 70s, and lo and behold, that's when we see most of the mobile home parks were built, right? So I think the next 10 years are going to be very similar to the 70s in terms of what types of houses we build. We're not going to be building these 5,000 square foot monster brick houses that, for a family of four. We're going to be building, 1,500 to 2,000 square foot houses for family, 3 bedrooms, 2 baths, which are manufactured homes, right? Like, so I think that we have the answer. It's right in front of us. It's just we need a lot more people to do it. Um, Other things I'm looking at is ways to improve the manufacturing process, robotics, and just there's a ton of different things I'm looking at, materials. And my buddy down in Texas, Justin, is doing some really cool things with different homes from different countries. And but I think that's the next 10 years here, and not only in America but in the world.
I couldn't agree more. You and I have a very similar, almost identical mission statement, which is we want to be the change we want to see in the world, which is clearly housing is a problem. Clearly everybody wants to talk about it and ain't nobody want to do nothing about it. Enter you and I. And growing up, so a little bit about my backstory. When I grew up, I was actually bullied a lot, made fun of, ignored. Did not have a very pleasant childhood. And what that allowed me to do is grow a self-esteem from reality. And what that allowed me to do was not care what people said, because at the end of the day, I've heard it all, it felt like. And what that's taught me, or at least given myself permission to be, I give myself permission. A long time ago, gave my permission to myself to not be one of the cool people, not be interesting, not be this, that, the other thing. I'll do whatever. Laugh at me all you want. You're going to laugh anyways. And when I got started in the mobile home park space, about everyone, my spouse included, were like, are you nuts? And I am so glad I did, because again, my background is on a personal level is like, I don't care. Make fun of me all you want. You're going to make fun of me anyways. I believe this is a very viable way to provide affordable housing. And as you and I have seen countless times over the years, Brad, governments hate them, people hate them, but slowly but surely, with people like you and people like me and a lot of you listening in, what we can do is improve this reputation, because it is, period, full stop, affordable housing, viable, safe. Oh my gosh, go study up the builds of these mobile homes. They can withstand a lot. I know when you watch, I had Gene Norman on a couple years ago, the former weatherman, talk about this, and he's spot on when he's like, look, I hate to say this, but when you work as a meteorologist at a local news company, you always get the weather watch helicopter to go fly over the trailer park because someone didn't tie their home down right, and a trailer flew over, and that looks a whole lot better than a stick-built home that just has some shingles knocked all over the place, right? And so the media, like as with a bunch of different things, perpetuates a stigma that's just wrong. And so many people deserve good, clean, affordable housing, and people like you and I can provide that. But I love that, Brad. You and I could talk forever about that, because that's what gets us going, man. But for the folks who really, really, really want that question answered, let's jump right into the math. Brad, how do you had an interesting LinkedIn post recently where you said, in so many words, you would almost rather have a vacant pad than a tenant-owned home that was dilapidated, not paying, and a pain in your butt. How do you value a vacant pad? And can you dissect a little bit that comment that you made where you said, in so many words, you would almost rather have a vacant pad?
Well, I mean, the beauty of it is the market doesn't value a vacant pad, right? Like if you go
Right.
look at the NOI at blah blah blah, it's a six cap, I'll sell it for $2 million, whatever. But like I've got these other 20 vacant sites over here. There's they got the utilities there, but so the market's going to sell you the sites and it's got 20 vacant sites, but I value the vacant sites. I mean, more. I would value those 20 vacant sites more than the 50 occupied sites, right? Because I can go, we're getting, I mean, single wides from 36 to 45,000, double wides in the 55 to $65,000 range directly from the manufacturer. But we can move it in, get the lot rent, and all of a sudden your valuation, that lot went from being worth 0 to 100,000 at $600, $700 lot rent, whatever that is, right? And then also you have the cash flow on top of that for the whether you do your lease option or your rent to own or whatever you want to call it. So there's that cash flow that's free and clear essentially. If you've got the valuation of the lot, you can go refinance and refinance the new home and take back what you bought. Take your loan out for what you paid for it. So I haven't had to value vacant lots, but where their true value is, a vacant lot is really worth about $75,000. Just from a replacement cost perspective, going in and having, we're developing a bunch of this stuff now, but to develop these, it used to be like 20, 30,000 a site to develop, and it's now up to 50,000 a site. Then you got your land and, engineering and all the other stuff. So, I mean, that's the price of these mobile home parks is not going to go down. There's not going to be some crash where, there's gonna be some people who get foreclosed on over the next few years for sure, because they overpaid in the last couple of years. So there'll be some deals where you have a special servicer that's selling for bottom dollar just because they don't want to deal with it anymore. But for the stabilized stuff, these prices aren't going down. I don't think so, but I love the infill play. You get to, not only do you get to bring in a new home that, these homes last 50, 60, 70 years, hopefully more, but you get to reset to the new market rates, right? So the stuff that we were getting 10, 11, 1,200 a month, we're now getting 18, 19, $2,000 a month for the new homes. But our payback on a new home is 2 to 2.5 years. And then the increase of the valuation. There's so many reasons, but I haven't really been talking about it because the market doesn't realize that how valuable they are, especially one that has water, sewer, electric all the way to the lot already, and all you have to do is put the home on top of blocks. So
I love that. I love hearing that. That's a very great way to put it, which is, what is your replacement cost? So obviously, in theory, a cost segregation study can help you do something like that. But you're right. I remember years ago when I got started, the valuation to build out a lot was 20, 30K period, assuming no grading was involved and no other kind of permitting or zoning issues were existent. So you're talking 50K plus now, which is interesting to hear. And another kind of interesting thing I'll throw out as well is, so in other words, when you're valuing these, you should look at replacement cost. But another thing I'll throw out is, nowadays with the 1,500 plus or minus rent you can get on a park owned home or RTO, you get your money back quicker. And I remember starting New Clayton homes, and these homes were 30,000s to buy and then move in, set up, yada, yada, yada. So you're 40, 50,000 to bring a home in. And you remember, man, when we got started, 40,000 a site occupied felt really expensive. Mm-hmm. And why would you spend 50,000 all in to have it be valued 40 on the high side? Well, I'll tell you what flipped it is, now you're seeing some things trading for 100,000 a site. So for example, in Asheville, North Carolina, sleepy little town of plus or minus 400,000 people. It's boomtown out there, by the way. But they just had a massive portfolio trade for about actually, I think two, by the way, two portfolios trade for 100,000 a site. So when you're looking at it that way, all of a sudden, if you buy these things, you spend $50K because your infrastructure is already there, buying a brand new home, moving it in. By the way, one big reason why the stuff in Asheville traded for $100,000 a site, new homes. So in other words, just kind of want to put my slant on Brad's post on LinkedIn, which is just like, look, you have an old dilapidated mobile home. Maybe tenants aren't the best in terms of keeping their yard clean and kind of a pain in the butt for X, Y, or Z reason, versus a brand new home that is going to take you from, 50,000 and occupied to 100, because again, we're valuing these on cash flow. So again, don't want to get into, the ethics of, all right, well, somebody's already there. How can you boot them out of that home? That's their home. They own it. We've all seen the headlines and everything. From Brad's perspective, it's like, look, I don't even want to have that discussion. Economically, it makes sense to bring in a new home, period. But what if I don't have to go and non-renew and boot out someone with a home that's not even going to be moved anyways? So at least from a purely mathematical standpoint, that's interesting you threw out the number 75K. But look, this is an NOI driven space. That's how you value your parks, is by NOI and cash flow. And if you're bringing in a new home and you're keeping it a park owned home and even RTOing it, I mean, dude, you can get some insane valuations. And real quick, before I ask you my next question, I want to throw out another thing. You mentioned no major price adjustments to mobile home parks. I could not agree more. I think what happened for decades is mobile home parks were undervalued and rents were artificially low. Yep. The onus is on people like you and I, Brad, to march rents up to a fair lot rent ethically as we can without going over market. The onus is on us to do that. But the thing is, again, it's an NOI driven business. So if lot rent's been artificially low and people haven't want to buy these things, and oh, by the way, banks haven't wanted to lend on them, price ain't going down. Now, maybe in the short term with higher interest rates, we take a haircut on our valuation, but it ain't going back to like 10 caps everywhere. It's just not going to happen.
No. Yeah, I mean, and we, like I said, we take care of our residents. We take care of the communities. We have a management company. We have a construction company. We have a homes company. We have a moving company. We have a paving company. I mean, we go in there. We do all the utility infrastructure, take all the abandoned homes out, pave the roads, put playgrounds up, cluster mailboxes, and what is Daniel's? I haven't done those, but he's doing pickleball courts, which I want to try that. But we make it like a great place to live. Like I want to live there. I want to raise my kids there. Like there's just kids running around and bikes, and it's like, it's so good to see versus when we buy it. And it's like, there's 20% of the tenant base that's just killing the whole community because, their yard is trashed, or they have some, there's drugs here, or there's, this and that over there. Like you just get rid of them. Like, hey, you're not going to pay on time, or you're not going to follow our rules. You're gone. And we'll get we'll get a good person in here to take your place, because there's a lot of people looking for housing. I mean, I don't know what your applications look like, but ours are up tenfold over the last couple of years. It's insane.
Yeah. And I think a big reason is people are finally starting to realize it's viable housing. And I think that's maybe coming out of desperation because of the dwindling supply in general. But fuck, man, I've moved in so many first-time mobile home owners and followed up with them. I remember one gentleman a couple of years ago didn't speak a word of English, so I was talking to him in Spanish, and I was trying to delicately ask him, like, why? What do you do? Like, not in a negative. I got you. Just kind of like, just walk me through your thought process. And he looked at me and he's like, I'm a construction worker. I was paying $1,000 a month to rent something. Mind you, this is a couple of years ago. It's pre-COVID. I was paying $1,000 a month to rent, and now I'm paying $500 in lot rent. I own this home. I can fix it. I can rent it out. It's a bona fide asset. And what I think we're seeing too is these things in some cases are actually appreciating in value, even within a mobile home park.
It's so funny. It's so funny you say that, because like the way it used to be is if someone moved their house out, they'd come to us and say, hey, would you give us $5,000 for our house? And a lot of times we'd say, yeah, sure, we'll do that, and then go to rent it out or whatever. But like, it's so funny that once you improve the community and make it a better place to live, now we have tenants who are selling their houses for $40,000 and $50,000 to other
Yep.
people, and it's like, wow, that's crazy. So I never thought that would happen. That's been a new change. But
I think you and I, as well as a lot of listeners, Andrew Keel, for example, is a good one. There's a lot. Daniel, you mentioned him earlier. I've had him on the podcast a couple of times. There are a lot of smart people, younger folks like us, that are entering this space and just bringing awesome ideas. And it's mobile home parks done right, done the way it should have been, because way back in the day, it was next to nothing to move these mobile homes. So you talk to the really folks who've been in it since the 70s, 80s, they're like, dude, we'd have a list of people waiting to move in, even in rural markets. And I didn't have to do anything. They just show up, and rent was $100 a month. And why would I buy your home back? It's like, get it out. I've got someone right behind you who's going to move on in. Now it's, $5,000 plus just to move it single wide, double wide, even more, plus deck, skirting, electrical, yada, yada, yada. It's just different. And the thing is, I really want to see it done right, which again, that's another thing I want to talk about in a little more depth later, Brad, is we have a chance now together, not just me and you, but everybody listening in, to usher in the next generation of what mobile home parks ought to be, probably should be, and how good they can be, and all through the idea of improving affordable housing. So yeah, we're going to see some pretty crazy things that we didn't think was going to happen, like something literally with a title, appreciating.
mm-hmm. Yeah, I mean, my partner always jokes, but he's like, one day the government's just going to buy all of the mobile home parks.
I hope not.
No, they won't be buying mine.
Yeah.
But no, I mean, it's in terms of like, yeah, we have this opportunity to do it right, and to do it better than it's ever been done before.
Right.
So that's kind of what we're doing in developing a lot of communities right now. We got about 1,000 sites under development, and we're doing more of a MH hybrid, MH BTR kind of hybrid play, where we bring in really nice double wide, 2,000 square feet sheetrock interior, putting it on permanent foundation, and treating it like a BTR community. Because what BTR is not doing right is, like, one, we're way faster, right? We can
Yep.
go
Way
and
faster.
fill a 100, 200 site community in 6 months, right? It's depending on how many crews we have. But not only that, but we can do it at half the cost of what they're doing. So that's kind of, with the clubhouse, with the pool, with all the amenities, like, that's what we're working on now. So I'm trying to talk to as many BTR guys as I can and show them, like, hey, like, let's marry these two niches together, because they're the same thing.
Yeah.
It's just there's, mobile home parks, I think in the past they got a stigma, and rightfully so. Some of the people who, like you said, 20% of the owners did messed up the rest for the other 80%. But so we have a chance to change it, right? I think in 40, 50 years, you're going to see hopefully a bunch of communities that were built in the 2020s. If that doesn't happen, then I don't know what happens to half of our country. So, like, we need to get on this now. I was joking with someone, like, we need to get a group of 10 guys together who can commit to building 10,000 homes over the next 10 years, right? And if that can kind of go off of that, because the demand is there, it's not going away, unless people start combining households or moving back in with parents or whatever. Like, I don't see, I mean, housing, it's just unaffordable right now, and it's not getting any better. Inflation's not going down. Rates are, who knows when they'll pivot on that. But to be who my parents were when I was raised, shoot, we'd probably be homeless.
Yeah.
So I know there's a lot of families going through that right now, and we need more of us out there. We need an army. So I'm ready to build it if people are ready to join.
Yeah, I'm glad I had you on to spread that word because we need it big time. And I'll throw a little math at what you mentioned earlier about the 20% of mobile home park owners who ended up becoming slumlords. Like if you have $125 rent and a septic fails and it's going to cost you 10 grand to replace it. I mean, you're talking the better part of a decade to get that investment back. And what's stopping them from literally driving their mobile home out of the community? And what a lot of these mom and pops got addicted to was, I just don't want to raise my rent because I don't want to risk losing folks, or it's just easy, or it's just this, that, or the other thing. Insert ultimately what was a bad business decision, not at least keeping up with inflation. And what ends up happening in the long run is infrastructure that's ignored, and eventually the wrong people start getting in. And if you don't kind of rule with an iron fist in the regard that if somebody's up to no good, they have to go, it'll quickly get out of control. And then they turn into little slums. And then all of a sudden they're trailer parks and everybody's making fun of them online. And you have actual supply of affordable housing that just needs people like you and I to just spend the time, the headache, invest the capital. Like I don't even need to do anything. It's already zoned. A lot of these already have the infrastructure. Like we just need the government to get out of our way in the regard that, like, you can't come in here and be like, well, I don't want a mobile home park. Well, why? Well, it's, I'd rather have luxury, which I've heard before, which is very sad. But, what we need to do is have people who are energized to come in here and take actual units and bring them online, restore them to their former glory, if you will. Brad, let's pivot a little bit, because someone listening in might say, all right, if I'm doing my underwriting for an acquisition, obviously I'm not going to write 75. I'm not going to pay this guy 75,000 for a vacant lot. But in the back of my mind, that's a great figure to have, right? Which is, if I'm buying these for 30 a pad, all of them vacant or not, just pads, period. And this is going to be worth 75 to 100 with new inventory, with BTR, so build to rent, for those who didn't catch that. That's a really good kind of thing in the back of your mind to have. But let's take for a moment to talk about things to expect, because again, when you and I got started back in the day, the conferences were pitching how easy this space was. So let's, in true mobile home parks in real life fashion, talk a little bit about the difficult things, and at least just the kind of things to keep in mind about infilling vacant pads.
Yeah, I mean, the difficult things is what you said. It's the government getting in your way, right? Like, we'll have in Virginia, for instance, we have to get 7 different permits throughout the setup process. So that is applying for the permit, having an inspector come and approve it. Like, we didn't get approved yesterday for one because it had low gravel at the entrance of the porch, and it's like, you could have just told us to put some gravel on it. So now we had to go tomorrow. It's just such a pain, and it's different localities, right? Like in California, there's probably 10 steps. I don't know. I've never been there, but so I mean, Michigan, super hard just because of the, you've got to dig 3 feet, 4 feet, I think, pour the concrete. Certain places are different. So I mean, that's kind of why we're sticking really to the places that we know and that the regulatory environment is favorable. They won't get in our way. I mean, Texas, Ohio, and Florida is, I don't know about Florida. You know more about Florida than I do, but just different, there's certain localities, just they want to be all in your business, and they want to dictate things, and they want to show you they have power. But yeah, I mean, it's not difficult once you do a couple, but yeah, there's certain things that can get in your way. And like we bring everything in house, so we do it all ourselves. We don't outsource anything. So our guys know exactly what to do and how to do it, so there's no learning curve there. We've got crews that have RVs that will go, from park to park, which has been helpful. Just so you're not, like you said, you're not educating new people on how to do this. They know exactly how to do it. And we did used homes for 4 years. That was kind of where we learned what we were doing. But we'd go buy a used home for 2-3 grand, move it, renovate it, set it up, all that stuff. But now we're kind of strictly new homes just because we're trying to build at scale now and do them quick, and we've got capital to do it. So a lot has changed, but it's not easy, but it's not hard.
Yeah. It's project management skills.
Yeah.
That's
Yep.
the big thing. I mean, you're always gonna have your permits, moving permit, your outgoing permit, your demo permit if there's something there, your incoming permit. Then you got to build a deck, water, sewer, electrical. Might have some other grading issues, gravel issues you mentioned, or up north you have to have heat tape in certain scenarios. You're always going to have some markets where you have that one guy at the code enforcement, building code, or inspector department who's
Yep.
just interested in nothing more than whacking you with his power stick. It's a lot of execution risk for sure, but it's well worth it. And I agree. If you're going to infill and scale, you have to do it new, or at least you don't have to, but I strongly recommend you go new. It's way more reliable. You know what you're going to get, when you're going to get it for the most part, and it's going to upgrade the quality of your community. So I couldn't agree more. Brad, talk to us about how you personally do due diligence on a vacant pad.
I'm the wrong person to ask because I don't do it. But when I did used to do it, yeah, I mean, you want to see the water, the sewer, the 200 amp electrical. You want to make sure that it's flat. Like, that's why we love parks that have had homes there before, because a home has been there, and all you have to do is go put one right on top. But yeah, I mean, if there's expansion play where we've got to go, take some trees down, do the grading, all that. Like I said, it's your cost is about 50,000 a site. And if you're going to go buy a house, set it up for another 50,000, you're going to be in at 100 grand. But if you're going to get 1,500, 16 and 1,700 bucks a month, you're okay with that, right? Especially if you bifurcate and make the lot rent 800-900, because that's eventually where you're going to get to the whole community in 5, 6, 7 years.
Right.
Like we kind of we go up 25 bucks a month, a year, I'm sorry, just so the tenants are used to it. Like, hey, first year rent's going up 25 bucks. But the people that we move a brand new home in, their rent essentially is going to stay the same for the term. So you're going to come in at the 5 years from now type of rent, essentially the lot rent portion of the lease purchase that we do. But anyway, like, yeah, there's a ton of creative stuff you can do with the lot rent and the new homes and selling the homes, which hopefully I think Fannie and Freddie are starting to do some chattel stuff now finally. So hopefully we get that. That would be huge if our residents could get actual loans. That would change the game.
Yep.
Like normal loans that people are used to getting. That's why we're doing the permanent foundation in some places. But yeah, I mean, we're essentially, sometimes if we go long and buy the house and do our lease purchase option at the end, we're essentially the bank, right? We're doing the financing for them. But that's been successful too. So doing whatever we can to get people in.
Love to hear it. And just briefly, I'll answer my own question. I would say you're not going to scope every single line. It's just impossible. What you generally speaking want to do is verify sewer, water, and electrical are in a spot. You can mark it off and say that's a vacant pad, and also get your zoning verification letter too. So you have something from the city basically saying, yep, these are viable vacant pads. You can infill them. We're not going to get in your way. Your grandfather, yada, yada, yada.
That's
You brought up something interesting, which I want to hit on. Obviously, we've seen 21st Century Program for financing, First Bank, formerly Clayton Bank, Vanderbilt. It's a lot of really interesting ways you can finance new homes. They're easier to finance for a lot of reasons. It's cleaner, easier to do the accounting. What about for a used home? Have you ever used financing to bring in used homes, or in your experience, is it new or bust?
So we worked with Clayton Bank, I think they're now their First Bank, and they gave us a line. I want to say it was like a $2 million line for used homes. I can't remember how it worked, but I know it was like 9% money, and it ended up like eating away a lot of, when we went to sell it, all the fees and stuff on it. I was like, oh, I'm not doing this again. Let's just pay cash for the used homes. And we do the same for new homes. We pay cash. I've used 21st. There's some things I don't like about them. But I mean, it's good that, it's, they're helpful if you don't have the cash to buy the new homes, for sure.
So I want to reiterate, back 2016 when Brad got started, he was very, very different, saying, I want vacant pads and park owned homes. Now there's a lot of folks playing that game, which is good to see for a lot of reasons. But Brad, tell us, for new folks listening in who haven't bought their first mobile home park yet, who are listening to this and are going, this sounds something up my alley. Like, I'm good with local permit guys. I don't mind buying something sub 20 a pad because there's a lot of infill. I can go sort all that stuff out. What would you tell someone looking to get into the game right now with a limited amount of capital? Would you encourage them to seek infill, or would you say infill is more of a capital intensive game, so you should probably get a couple under your belt first? What would you say to those folks listening in?
Well, I've never put a dollar of my own money into any deal, so you don't need money to do this.
I second that.
But no, so I've underwritten a ton of deals. You got to learn. I listened when I first started with this, listened to all the podcasts, all the books, with from Deals on Wheels to your podcast, to Jefferson Lilly's podcast, which is great. I don't even know if he's still doing anymore, but it was finally, I knew what to do. I knew how to do it, but it was like, you just need that kick in the butt, like, go do it, go find a deal, go get it under contract, do a 5-6 page sim teaser, whatever you want to call it, how you're going to run it, what you're going to do to increase the value, and take it to a handful of people that have some money, because there's a ton of money on the sidelines, especially looking to get into this. So you just got to do it.
I couldn't agree more, man. The only thing I'll disagree with you on is that I personally put my own money in deals now. Back in the day, I couldn't. But look, I love that. Whether you continue to not, or you don't up front, or you do a little bit, whatever path you choose, like, I really am so glad to have Brad on here, because he's so like-minded in the regard that you just don't need money to get started. I see it so frequently on the Facebook Mastermind Facebook group that we have. Every now and again, a new member will post to the little weekly, daily questions, I don't have any money. I need to wholesale some deals first, or I need to do this, that, or the other thing. You do not need money to get started. You do not need experience. If you're crazy like me and you're willing to go move into a mobile home, which, by the way, after listening to Brad, it's not crazy anymore. These communities can be so nice, right? So what I'll say is, Brad, I cannot agree more, man. You don't need money to get started in this business. You just don't. That being said, perfect transition to the last bit I wanted to talk to you about here, which is encouraging good would-be entrepreneurs to get off the sidelines and get in the game and bring your good ethics. Brad, what are some of the things that you've seen, kind of disturbing trends, if you will? And right before we hit record, you and I were saying a big reason you and I do what we do, and a big reason why you're finally willing to come public on the podcast is you, like me, we just want to help good people get in the game. Brad, what would you say to those good would-be entrepreneurs? And what would you say to just someone who doesn't necessarily want to buy a mobile home park, but is from the outside looking in, about potentially deleterious behavior by some individuals? Like, what risks do we have from certain bad behavior investors?
Oh, I mean, geez, there's like a lot of risk. People coming in and just doubling rents for no reason, not putting a manager on site, not taking care of the property, letting homes just get destroyed. I mean, if you have an absentee owner, a park can go, it can, snowball into avalanche real quick, right? Like you just said earlier. And I feel like that's happening. People who don't know what they're doing, they're not putting in the time up front to educate themselves. They're not going around and seeing how parks are supposed to be run. They're not talking to guys like us. Like, they're shooting from the hip because they've got, they were borrowing at sub 1% a couple of years ago, and they went and bought, $500 million worth of properties, and they're just, oh, we'll just double the rent and then the value's doubled, right? Like, no, not if you don't take care of it. I mean,
Right.
tenants they're going to start moving their houses out. They're going to fight back, which I'm thankful for them for doing that. If you have an owner who's not taking care of the community, I'd be the first one to tell you to leave. But yeah, I mean, I got into this mainly, I want to help people avoid being homeless, honestly. Like, it's kind of like, where else are you going to live for, under $1,000 a month at this point? So to see other people doing that, I don't like it at all. And I don't mind calling them out either. So
I'm right there with you, man. What advice do you have for people looking to get in the game?
Educate yourself. Talk to us. We'll help. I'm here to help in any way. Tell you what we're doing, some of the stuff we've learned, and constantly improving, constantly getting better. But yeah, I mean, like we said, listen to podcasts, read books, educate yourself, talk to people. Networking is the best. I mean, going to conferences, you can speak to that, but like, there's nothing better. Like, spending a couple $100 to go to some of these conferences and start networking with people. Like, I feel like I get so much out of those. The in-person ones. I know you do the virtual ones, but I like the in-person ones, man. And I miss them too. So I hope that comes back. But yeah, I mean, talk. When I first started, I was talking like I was gonna go buy. I'm buying 5,000 sites. I'm gonna do this. I'm gonna do that. And like, I hadn't done anything, right? But like, you start talking to people and people start getting interested, and then it's like, you kind of manifest it, really. And that's kind of how I feel about life, really. But anyway, yeah, I mean, this is your world. Like, you get to create your own reality, really. Especially when you get the freedom that comes from this. So I wouldn't change a thing. I'd go back and do it the exact same way. I would just try to go a little bigger. My partner he's good with us staying at the level we are. But yeah, I want to do something bigger. So we'll see where that goes.
Brad, I can't thank you enough for coming on. For those listening in who want to take you up on that, how can people find you?
Yeah, it's LinkedIn, Brad Turner, or brad@treadcompanies.com is my email. And I'm not good at responding, but I will respond. I'll flag you and then check out my flags on a Monday morning. But yeah, I'm happy to help any way I can. We need more of us. So
we do. Brad, I can't thank you enough for coming on, man.
All right, man. I appreciate it, Ryan. You have a good one.